Hi, welcome to this video day. It's the 10th of January, it's Sunday. Just going to give our outlook and forecast for the euro against the USD. We're also going to look at 3 euro correlated currencies against the USD as well. So we're going to look at USD CZK, USD PLN, and USD SCK. We'll go over to the charts shortly. Now, in terms of euro USD, technically it is a big uptrend, and the market consensus is basically very bullish of the euro going forward. I've seen, the majority of forecasters looking for higher prices, looking for 125 or maybe even 127. Now, in terms of euro USD, it is a big uptrend. There's a key level to watch for a breakdown, and we think the probability of a breakdown is high due to what bond yields are doing. Bond yields are going to be really influential on the euro USD pair going forward. Now, if euro USD does break down, the correlated currencies or proxies could well go down even quicker than the euro, and I think they offer really good risk to reward trading opportunities. Now, in terms of the charts, let's go and take a look at them right now. But just before we do so, please do keep in mind it is my view as of this specific moment in time. It can of course change in line with market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, just click on the link beneath this video and you can get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders and check out our recommended ECN broker. Right, before we go and look at the technical levels in the FX pairs, I want to look at why bond yields are so important. So right, let's go and take a look at the trade setups. I'm just going to look at some charts in relation to bond yields and why they are so important. Now this is the 10-year notes. Now, for anyone unfamiliar with bonds, what are they? Well, basically they're the cost of US debt. Now, in terms of why the dollar has been going down, it's because the Fed have been printing money and trying to force the yield down on the bond. And they do a good job of it here. Spike up briefly, sideways. Then we kind of grind higher. And this is a weekly chart. We break out to the upside. So the yield on a US bond, 1.11, above the psychological 1 level, which big institutions will be looking at. So basically, that is a good yield if you're an investor in bonds, and bond markets are huge. So if US bonds continue to go higher, the bond market becomes attractive. So money flows into bonds and will firm the USD. If you look at the daily chart of the T-note, you can see we come up and then you get the breakout above that level there, above the psychological 1 level, 3 blue candles. Okay, so if the bond continues up or remains steady, you're not going to see too much dollar weakness. If the bond continues to increase, you're going to see dollar strength. So it's very important to keep your eye on the bond market. I'm going to compare US bonds with Eurozone bonds in a moment, but just want to look at a couple of charts that just show how oversold the dollar is generally. It's oversold in all major currencies, speculators heavily short. 3 key groups here. Asset managers, a massive group, biggest short position ever. So if the dollar can mount a rally, we'll look at the key levels in a moment. The shorts will come out the market. It should be a sizable USD rally. Here we've got how stretched the dollar is in terms of weakness. And you've got the euro here. Okay, you can see it, the brown color there. Euro basically most overbought. The most overbought it has been since 2007. Okay, so yeah, market very heavily short the USD, long the euro. Now, if we go to a chart of Eurozone bonds, this is a chart of the German Bund, 10-year yield. And basically, what you'll notice on this chart is the euro will generally move in the direction of the bond, okay? You can see its yield is negative 0.5, so that yield is extremely unattractive against the US bond. See, the euro comes down here with the yield. Okay, it gets up there a bit, but then we come down with the yield is beneath it. Now you've got the yield, you can see it. It's going south, and the euro's going north. That is not going to last. This chart is from JP Morgan. So yeah, US bonds on the up. German bonds and eurozone bonds going down. Euro's going to struggle to move higher. This is just a general chart on real yields in terms of the dollar index, okay, and it's the 5-year yield. This is from Societe Generale. They make the point that real yields not as dollar bearish as before, okay. So here's the dollar in the grey line, overshoots to the downside when the real yield is going up in its favor, but it quickly recovers back up, okay. You can see it there. Now what you've got is the 5-year yield on the up, dollar on the way down. So this divergence, very, very important. If you're looking for a turn in the euro against the USD, which we obviously are. Now what we are going to do is go and take a look, euro USD first, then we'll look at the euro proxy or correlated currencies. All right, this is the euro USD daily chart, and obviously you can see a big uptrend, a little bit of weakness on Thursday and Friday. I'll do the technical levels in a moment, but just want to go through these points which are also relevant to the euro USD pair. Now, in terms of majority view, it's for the euro to get to 125 or 127, so 300 to 500 pips higher from here. I think what we can keep in mind is it didn't get there in 2017 when the euro fundamentals were a lot more bullish than they are now, with the ECB actually talking about raising rates. They've got negative rates in the EU at the moment, and at that time the eurozone economy was outperforming, data coming in really good and above forecast. That is not the case right now. At present, if we look at leading economic indicators in relation to the health of the economy, European PMIs have been poor, inflation data poor, and just general economic data poor. US is doing better if you compare the data, and the market is actually looking for the eurozone economy to recover quicker than the US. That is not borne out by the data, so I take that as a negative for the euro. There are also more severe lockdowns in the EU than in the US. That will reflect on economic data going forward. And also the ECB is more accommodative. And what I mean by that is in terms of stimulus. We all know the Fed are stimulating, i.e. printing money. That's bearish for any currency. But so the ECB, and if you measure it against GDP, the ECB are doing more stimulus than the Fed, and they're increasing it, okay? Also, the euro has a negative interest rate as well, so take that as a negative for the euro. On Friday, we had US non-farm payroll employment data. It was a really bad number, below forecast, but the euro fell. Okay, the euro couldn't rise against the USD on a really poor non-farm payroll number. Why? It's just not important. You see a lot of people focusing on non-farm payroll on Friday. Well, no point, because it's not going to make any difference in the big scheme of things. The market is already discounting Fed stimulus going forward. That's in the price, and a big government fiscal stimulus package. Okay, the one non-farm payroll or poor non-farm payroll number isn't going to make any difference to what the central bank and the government are going to do. The big money now is focusing its attention to bond yields. Now, in terms of the technicals, pretty simple in our view. We bounce up here above the 118 level, and you'll see this 20-day moving average. A strong uptrend. Prices will find support at the 20-day moving average. We don't really touch it, do we? Then we do here, and you can see we go through the 20-day moving average and just finish slightly above it. Now, in terms of the 20-day moving average, we want to see it break. Okay, so that is our level, key level, if that breaks, we need to get through it, okay? Clear of that round number, so say 121.70, then we think the euro could be off to the downside. Just draw a trajectory there. That is obviously the key resistance level. We could chop around in this range here, but we're looking for a breakdown. If we break down, we know the market is heavily short or the USD and long the euro. So those traders will come out on stop. So we think this level here, 118, another round number, is a good target. You see where we come up there, we find kind of support off, come through down to 180. So we get the break lower, put the stop behind the nearby double top, and just see if she runs. I like it. Market is just so bullish of the euro, but when you look, kind of at the facts and the bond yields and so forth, it points to limited euro upside and a potential big break to the downside. And I didn't actually think that it would break above 120, but bullish extremes very often overrun. I think the case for euro weakness now is very compelling. So we shall see. Keep your eye on that key 122 level. Right, let's go and take a look at the euro correlated currencies and key levels to look at. Right, just look at the 3 euro correlated currencies. In terms of the charts, I'm just going to use the charts on our member center. We're using the same sort of technicals in terms of trading these pairs as in terms of trading euro USD. Now, in terms of the SK, it has been the strongest currency against the USD this year. And you can see here we break below the 20-day moving average. Touch it there, can't get through. Touch it there, can't get through. Now we're kind of traveling sideways. 3 very small candles, volatility low. Okay, and I think the selling is basically exhausting in this pair, and I've already got a trade in. You can see it at the top there. I will add above this 20-day moving average. If we can break above the 20-day moving average and this double top here, then I think we could get up to 860 and possibly even run on to 880. Speculators heavily short the USD. I've got a trade in early, just simply because I don't think the risk is high of the USD breaking down. Of course, now I've said that, it probably will break down. But no, I think, early trade in and then we will add. And also, if we look at the SEK generally, I just want to look at it against the euro. It's done pretty well against the euro, hasn't it? So it's a bit stretched here as well. If the euro goes down on the USD, I'm looking for the USD to go up quicker on the SEK. Okay, going back to the proxies or correlated currencies, this one is USD CZK or Czech krona. USD tops out here, tries to get through the 20, touches it there, down. Okay, so we're below the 20-day moving average, and no surprises, we want to just buy above this double top here and the 20-day. See if she runs. I'm hoping she can get up to 22.50, maybe even run on to 23.50. Also, the euro is oversold on the Czech krona as well. So, decent risk to reward just to the first level of resistance. Obviously, we've got to get there, maybe even a run on to the second level. If we get to the first level, I'll be pretty happy. Now, in terms of last pair, it's the USD PLN. And again, top out through the 20. This one's slightly different because we do get above the 20 and then we come back to trade around the 20. Okay, again, just going to get long above the triple top on the tails, away from the moving average. We should get to there, and then I think we should get back to these nearby chart highs. So they're the pairs, and I think they will look decent risk to reward opportunities. And in terms of USD weakness, I must admit I didn't think it would weaken as much as it has done, but now so oversold. I think a good rally is coming. We shall see. But that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.